It's a bull. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Don't have my standard Lauderdale by the Sea live cam on right now. I'm using the sister city down the street from us, the Deerfield Beach underwater cam, which is just as beautiful. If you ever want to just relax for a little bit and watch a really cool live cam, this is one of them. That's a Bermuda chub that just went by. And what the heck is that? Another Bermuda chub. And those are look downs. They're pretty cool looking fish. If they turn sideways to you, they're almost invisible. They're very thin. But no less, we're not here to talk about fish or live fish cams or anything. Just a really cool cam. Again, live Deerfield Beach Cam USA underwater. Right down the street from me, too. We're very lucky to live in this area. So gold $2,500 plus, silver $35 plus this year for sure. As you know, I am not big on making short-term predictions. I usually like to throw them out there a lot longer than that, just because it's safer. You don't put your foot in your mouth. But you know what? Everything is screaming. You know, my gut's screaming, the radar's screaming, the news signals are screaming. Everything is screaming a major correction in so many different ways, that we're going to start seeing a higher inflation. We're going to start seeing commodity prices rising quite substantially. The cost of living is going to increase substantially. It's already expensive. Mortgages are expensive. Homes are expensive. It's very costly to live out there. What's going to happen to the average working guy? It doesn't look good overall. It seems that the classes are splitting up. The middle class is going one way or the other. They're either becoming more wealthy or they're becoming more poor. I think at some point we're going to be like most third world countries. You're either going to be rich or poor. We have really we have our governments, our politicians, our officials, our media have really screwed the pooch, the middle class, for sure. Let's take a look at ZH here and see what's going on out in the ZH world. ZH is a blog kind of news hub. It gives you all different types of sources here. This isn't just ZH writing all these things. For example, you'll see here this is done by Vince, or by Tyler Durden, who is CH, so I just opened up my mouth and said, and this is done by Vince. There's a lot of contributors to this, including, you'll see Bloomberg articles in here as well. Not too much on silver. I looked at this article right here by Vince Lancy, mostly technical stuff, and I like technical stuff, but technical stuff is, charts and those kind of things. Reading charts and technical analysis, to me, is like driving a car using just the rearview mirror only, and driving a car. And actually, I stole that comment from Alan Greenspan when they asked him. I think a reporter asked him what it was like, running the Fed, and how he made his decisions. He says running the Fed was like driving a car only using the rearview mirror. So I could see the similar analysis using technical analysis and charts and stuff. And again, if technical analysis and charts worked all the time, they'd be correct most of the time, and a lot more people would be wealthier. Let's take a look at any other articles on here. I didn't see too much. Again, just your typical political and economic nonsense that of course is going to be good for the price of gold and silver, ultimately. Not good for the economy, not good for the country, but good for precious metals. Futures flat as soaring commodities depress tech stocks. And again, what have I been talking about for the last year, and more so in the last couple months? I've been talking that I think that we're going to see a commodities boom, and pop, what do we got? We got a commodities boom going on here. So, and again, I feel this is the year for a 25. We're going to touch that. We're going to break 2020's high on gold. I am pretty certain of that. And we're certainly going to break 2020's high on silver as well. Lots of interest in silver too, for many reasons, including the silver squeeze folks. You've got more, you get 70,000 new buyers out there. Again, their buying power may not be that big, that Reddit group. However, they've created a lot of attention for precious metals, particularly silver. So the publicity has been phenomenal, and especially the publicity amongst the younger folks who seem to be a vast majority of the buyers out there buying physical silver. As I said, not too much out here, so didn't mean to go by so fast, that made me dizzy. Not too much to talk about here, just your typical nonsense. And I'm going to move into GATA. Oh, hold on. This was an interesting visual. The Golden Future, the Economic Case for Gold, done by Kalo Gold. I do believe I found this on ZH the other day, and I saved this to kind of just take a look at it. Let's just go over a few things here. Gold is not only a precious metals, it's also a precious investment. Investment is one of the largest source of demand for gold. And if you take a look at the 2020 gold demand chart, you'll see that 47% is investment, 37% is jewelry, 8% technology, and 7.3% in central banks. While these numbers are probably pretty darn close, I would say that the jewelry is probably misconstrued a little bit because, as I've said many times, we view jewelry as something that you wear. But a lot of people in India and a lot of people in the Asian countries view jewelry as kind of an investment, as money. They view it as bullion. And as I know, in India too, they buy jewelry like we buy bullion, more or less. So they're going to own bracelets and necklaces and rings and that kind of thing for their investments instead of owning a gold bar or a gold coin. Typically, this is how a vast majority of people in India and some, again, Asian countries hold gold as bullion. So you can't really call it jewelry. I would bet you that the jewelry part of this is really more of that's investment in a jewelry form, at least half of that. So looking at it as just jewelry, I don't think is really genuine. Not a good way to look at it because, as I said, I think half of this number, at least or more, the people that are buying this jewelry in Asia and India are really just buying their form of gold bars and gold coins. Let's take a look at a couple things. This is a nice chart too. I recommend you take a look at it. It's called A Golden Future, Visualizing the Economic Case for Gold. Well done, and it's good visual. So a shield for all financial conditions, and we'll get moving along to this one. Often considered a hedge against financial collapse, gold is a financial armor that can shield investors from uncertainty and instability. Well, we know this, of course. And they're going to go into, amid the economic turbulence of the 2020s, gold ETFs saw record highs. Again, not a big fan of ETFs. We've talked about ETFs many times, no less. It is, for most people, they believe that is gold. So let's take a look at the times. 2013, look at the sentiment for gold at its lowest, but 2012 was the big crash, the big takedown, the big manipulation of precious metals when the LMBA and COMEX took down the price of gold and silver purposely, and I believe probably with the help of some government entities as well and major institutions, but we can talk about that. That's in the past, but that's what took down gold and silver at that time. But we've been on a bull market ever since. Remember I told you I thought 2016 was the start of our bull market? Well, there you go, right about there. 2015, 2016 is where I estimated that we started our bull market in precious metals again, from where we were back here. See that line right there? Well, we're in that same line, except I think we're going to see even bigger now because of the commodities issues and the issues we're having. No less, pretty cool. What is the source of that? Bloomberg is the source of this chart right here. Again, really cool charts. The best defense, providing stability and volatility. Now, some of you folks that are silver stackers out there, you want to know about gold as well. So don't, fast forward through the gold stuff. Gold will bring up the price of silver, not the other way around, even though I think silver has some room to move up. If gold just took a total tank and nobody wanted gold anymore because the economy was so good, then silver wouldn't do much better, guys. So for you silver stackers, it's very important for you. Well, I always think it's important for you to own gold as well. So if you're stacking silver, you don't own gold, you should be. You should own it. And if you're not following gold, you should be. And there's a couple good reasons for that too, including the gold to silver ratio, which we'll look at in a little bit. The best defense, providing stability and volatility. During volatile times, gold can provide investors with the opportunity to outperform while the rest of the world seeks shelter. How gold performs during recessions. And this is pretty cool. I like these little recession bars they have. Macro Trends does this. I wouldn't be surprised if that was Macro Trends. It is. Source, Macro Trends. I recognize their chart here. Providing stability and volatility. How gold performs during recessions. But let's take a look at the recessions here. Here we go, right before 2010. You know, the 2007, 2008 recession from the great financial collapse. Look at the price of gold then until it got, again, smacked down. And that smackdown in 2012 of gold and silver, that wasn't natural. Again, that was sheer manipulation by COMEX and LMBA. I mean, in your face manipulation, crooked. Somebody should have went to jail for that. I still think that to this day, but hey, let's look forward. Let's use the past as a guideline, and let's look forward. But take a look at the 2020 recession here as well. Hey, if you don't think we're in a recession, the only reason it doesn't feel like a recession is because the Fed is just endlessly printing money and propping up the economy along with the Treasury and the U.S. government, so that it doesn't feel as bad. But you know, that party will come to an end, folks, and when it does, boy, there's going to be some crazy shit going on, in my opinion. So there's your 2020 recession, and look at the price of gold again. There's your high in 2020, and of course we're down here, but you know, look at this. Look at this peak right here. Recognize this peak? Look at this peak. You got that downtrend, you got that downtrend, and then what happened? So really, the real gold bull market didn't start in 2012, where we see the peak right here. It started earlier back here, just like I told you where we've started again in 2016, back here. Look, here's our next cyclical gold market, and I think it's going to take us much higher than that. But how does gold shield investors when other assets don't? I love this chart, actually. This is pretty fun. Gold's historical correlation with other assets. And I'll quickly go over this. Of course, gold's correlation with other assets, the U.S. dollar. Look how terrible that is. And T-bills. And as you look down here, let's see. What's done just as good, if not better than gold? The S&P over and all. But again, look at this. S&P, MSCI, EAF, U.S. investment grade investments, U.S. bonds. From here down, basically, this stuff is, the party is over here, folks, I think, for the S&P and some of this. So gold is going to do real well in this environment. The party's over for almost everything here. NASDAQ, Russell, high yield, German bonds, U.S. treasuries. Wow, I didn't even think of it that way. Gold's lower historical correlation with other financial assets provides lower portfolio risk, effective diversification, and downside protection. Wow, really cool, especially if you're a first-time gold and silver buyer, you're new at this. Definitely you want to stop my video right now, reverse it back, and make sure you remember this site and look at it on your own. Take some time and look it over it real carefully. Gold is great for preservation of capital, and this is what I've been talking about. If you're in the gold and silver market to get rich quick, you're in the wrong market. You should go to a casino or stay with cryptos or something, or try cryptos out. That's get rich quick. The gold and silver market are not get rich quick. It's all about preservation of wealth, and as they say here, preserving capital. The world's entering an era of quantitative easing. We've been in it since 2008 or earlier, actually. And there are three signals that gold performs well during these periods. Higher inflation, which we are really about to see soon, folks. Rapidly rising money supply, which we have seen since 2008. This is nothing new right here, rapid money supply. And falling interest rates. That's nothing new either. We've seen that. So what we haven't seen yet out of these three is higher inflation. And here it comes. That train's coming rolling around the corner. So there we are. How gold performs during inflationary periods. Look, 15.4% during times of high inflation. So there we go. Gold, is that a get rich quick? No, that's not get rich quick, but that's a great preservation of wealth if you look at this number and you think that percentage is not bad. Let's go down here to gold price, money supply, and T-bill returns. Boy, this chart goes in and visually goes into a lot of really cool stuff. This goes into more technical stuff. I'll leave that for you, the technical guys that want to kind of pause the video and read this chart yourself. It's very interesting. When prices levels rise due to inflation, the value of fiat currencies depreciates. In these times, gold can act as a safe haven for central banks. Again, wealth preservation against a falling dollar. And that's really what it's about. Bank gold reserves. Central banker gold reserves have increased 14% since Q1 2010. What have I talked about for a long time? Central bankers, Wall Street, corporate media, talking heads on, I guess I'm a talking head, aren't I? Economic talking heads on corporate media. You know, the Keynesians out there. You know, they'll all tell you. Even Warren Buffett said at one time that gold's a relic or something like that. And I think not Greenspan. Greenspan actually liked gold. He wrote a paper on gold. Powell recently made some comments about gold just being an old relic as well. But oddly enough, for old relics, why have they increased their supply of gold by 14% if it's an old useless relic? You know why? Because they're lying to you. They can't tell you they can't scream, "Get out of our dollar. Our dollar is shit. Buy gold." They can't say that. They have to say the opposite. So think about that. And they own gold. So, you know, you have to pick up these lies when you hear them. I mean, they're clear as a bell. You know, it's just, well, anyways, I'll move along from here. I could go on, you know, I kind of digress a little bit there. I could go on forever. Delivering long-term value, absolutely 20-year returns, gold versus key assets. 14%. Gold has delivered an average annual return of 11.2% since 2001, outperforming other key assets. So since 2001, it's done very well. But you know what I don't like about this is that they picked a time, 2001. It's really easy in data to cherry pick data. Stock guys can do it. The crypto guys can do it, where you just say, well, from this period to this period, gold outperformed, or crypto outperformed, or the stock market outperformed, all these. So I'm not a big fan of cherry picking dates on data, so I'm going to blow by this one real quick. Not a big fan of that myself. Oh, and I guess I'm down to the bottom here. Hey, listen, definitely check this out for yourself, A Golden Future, Visualizing the Economic Case for Gold. It just strengthens my case. And for you silver guys, like I said, you need to be reading these gold articles, and you need to own gold as well. And for you gold people that don't own silver, I say just the same for silver. GATA.org, not much to talk about here. Whatever happened to the ton of gold ship? Good article right there that started the Klondike Gold Rush. Love these historical articles that talk about these shipwrecks and stuff. Maybe someday I'll start doing videos on those as well, because I am a rare coin dealer, but I never talk about rare coins. Go figure. As gold and silver join commodity boom, try the calendar. Oh, I'm sorry. I'm just reading stuff. Let's see. Basel III rules. Well, this is what I wanted to look at. Basel III rules will wreck gold suppression. LBMA warns Bank of England, and this is a true article. Pending Basel III regulations emanating from the banks for international settlements could destroy the clearing and settlement system for unallocated, and that is paper or imaginary gold and silver. The London Bullion Market Association and the World Gold Council warned that the Bank of England this week. In a 58-page protest, this is a protest, folks, get this. Banks are protesting that they actually have to own what they tell people they have, you know. So, you know, or the banks are protesting the fact that they can't have paper that says they own gold when they really don't. That's a lot of risk there. And the reason they use that risk because they make more money by not holding that gold. So of course they're protesting. It's cutting into their pockets. The 58 protest, sorry, I got a little lost there. The LBMA and the World Gold Council complained that the net stable funding ratio provision of the Basel III regulations would require that London bullion banks to hold funds offsetting 85% of the value of the unallocated gold they hold for customers. And the banks cannot afford this. Well, of course they couldn't afford this. There's got to be some kind of. But again, if you're these banks and you're selling something you're calling gold, then you better have some gold to provide behind it. Otherwise, you're just selling a Ponzi scheme, you know, paper bullshit. Again, I digress. I'm sorry. Most precious metals held by LBMA's trade processing banks operate as a London Precious Metals Clearing Ltd. They are unallocated metal, the protest says. And of course, I've done so many videos on unallocated versus allocated that I'm not going to go into that now. You should know by now. If not, you can do a quick search on your search engine for allocated and unallocated. It'll tell you. According to the protest, the new rules will have a damaging effect on the precious metals clearing and settlement system, potentially undermining the system completely. The protest continues that the required stable funding for short-term assets would significantly increase the cost for the London Precious Metals Clearing Ltd. Well, it would increase costs, but again, if they were doing it honestly and they were really had real gold to back this paper, well, that's the way it should be done. Clearing banks to this point that some would be forced to exit the clearing and settlement system, which would maybe even risk at collapsing completely. That's complete nonsense. That's screaming that the sky is falling, because it wouldn't. What would happen is when these weak hands that can't afford or are too cheap or greedy or too, I'm not even going to say it, it's just not legit, selling you a piece of paper that says you own gold and they really don't have the gold to back it, they need to leave. They need to go. And what's going to happen is when they go, stronger hands or a better system should take place or come in place and take over their business. That's the way it works in a real free market capitalist system. The protest acknowledges that the LBMA member banks obtain gold loans from central banks and relend the metal to support the liquidity of the market, the long-standing euphemism for central bank intervention to suppress monetary metal prices and support government currencies and bonds. So the protests that they wrote basically acknowledge what they've been, people have been called tinfoil hat conspiracists for saying that the LNBA and these guys have been leasing gold to cover their non-existent position from the Bank of England, and some even say in the United States we've done the same thing here. The Fed has loaned its gold, which is very dangerous because, again, what we've talked about as well, third-party risk. So if the Bank of England loans gold out supposedly to, and they don't get that gold back, but I suspect what really happens is the Bank of England just gives the LBMA a piece of paper. They don't actually do the transferring back and forth. It's a big Ponzi, in my opinion. So let me move on from here. Otherwise, this could be really long. More or less, you need to read this article. And a lot of gold people have been talking about Basel III rules and how it's going to wreck the gold price suppression. I've seen a couple articles saying that that may not necessarily be true. I didn't find them right today to read them to you. But again, very interesting thing. Let's see what happens here when Basel III kicks in. Let's take a look at spot prices today. Coin said bull today, and I would have to concur with that. I looked at markets last night. They looked fairly strong. They were maintaining where they were. And let's take a look at what they were last night, overnight markets. A low of 1831 and a high of 1845 since the opening yesterday, which was around 6 o'clock on Sunday, our time locally. 27.65. Man, silver's making a nice little run here. Look at that, 27.89, almost hitting that $28 mark. And a range, again, 27.51, 27.89. Good strength last night, overnight, and today. And probably why the coin will be right as far as a bull market. It will be up today, and I believe the same. So platinum 2 up there, looks like it got near that $1,300 marks. And hey, markets are looking really good, but I've expected this. This is what I've been telling folks for the last 6 months now, with prices down, when gold and silver prices were down. All the new people, oh, it's down, it's never going to go. Bullshit. We're in a long-term bull market, and as if you notice, I showed you that on the little graph earlier, which I could pull up here. We're in a long-term, so follow my cursor right here. Ready? Long-term, like this. Whoop, over the year, and then we're going to see this. Boom, 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 boom. So we're in this curve upward right here, and we're only a couple years. Again, I think our bull market for gold and silver started in 2016, and they don't look, gold and silver bull markets don't look like other bull markets, especially bullshit bull markets. They're usually slow slopes, and then they have some big ups, and then some big downs, and then big up, and then slopeward down. So we're not even in that big up yet, in my opinion. So I like markets. I think we're going to be up today overall. I think this week may look pretty strong. And if you do see some major monkey hammering, if you see gold get hammered below this level, as I said, and silver below this level, I don't care what level it gets hammered at, you should be buying these dips. You buy the dips when you can. If you had planned on buying buy the dips. I think at some point, as I said, $1,900 will be the thing of the past, $30 will be the thing of the past, and so with $1,300. This is the year that'll probably happen. Again, my gut feeling tells me that. I think we're going to see $2,500 gold and silver, $35 plus this year for sure. And I'm a conservative guy when it comes to making those kind of predictions. I really am. Could I be wrong? Possible. But I feel it. I just feel it. Oh, there we go. Sorry about that. CCE spots. I want to take a look at the current, let's take a look at the current prices because I want to look at gold to silver ratios, something that's real important as well. I've been saying for you silver stackers that you need to follow the price of gold because gold, I see gold, silver, and platinum as like three siblings, all right? Gold being the older sibling, the more measured one, the one that goes up in more measured increments. Silver being the wild, crazy middle sibling that jumps all over the place and can make runs past its older sibling. You know, when I say past it, not in price, but in the ratio term past it. And as far as platinum goes, platinum is just the goofy, younger, kind of plodding along and following the other two metals. And palladium, I just don't know anything about it. Don't get asked about it. Why study something there's no money in, at least for retail bullion guys like myself. So let's take a look at the calculator here. 1840 divided by 27.65. So 1840 divided by 27.65. I think I said right. Did I say that? Sucks getting old. My memory's going. Yeah, we're good. 27.65. There's our current gold to silver ratio right there. 66.54 to 1. Let's go to the chart here. 66.54 to 1. Where does that put us on the chart? Right here. It's falling, folks. Look at a high of 2020, which is 120 to 1. I don't see it here. But look, we're getting into that falling ratio market here. And what does that have to do with anything right now? Well, I want you to take a look at the last time we had that falling ratio. Look at this. 2011. Look what happened in 2011 right here. This was the height of your market right here. This was the height of 2012 when gold made its first major run and silver was at 40 bucks an ounce, almost $50 an ounce. Look where we're going again. That ratio is coming down again. So, and look at this ratio. So one of the things I think you'll notice in these bull markets in gold and silver, that the gold and silver ratio declines substantially. They get much closer together. A good example, again, 28 to 1 there. Look at the spikes down. These are the height of precious metal bull markets right here that I'm pointing to. And look where we're going right here, folks. So where we're at, 66 to 1, we were at a high of 2020. And this is really odd, too, because 2020, we saw another major top broken in gold, and not silver, but in gold. Gold broke a top in 2020, even with a ratio that high. So that's really funky. So what's going to happen here when this ratio tightens up and goes down to these levels we see? You know, could we see a 43 to 1 ratio in gold and silver again? I think it's very likely we will, based on this chart right here, or close to that. And again, I think this gold to silver ratio chart is very important to watch. I think we're in another major bull market here coming up, and I think the gold to silver ratio will signal that to some degree. And that's really about it. Well, what I also want to point out too is the lines here that you see, these gray lines, are recessions. So look at the recession. Right before the recession, big up in the market. Right before this recession, big up in the market and then down. There we go, 90 to 1 at one time. So take that for what it is. You should be watching this stuff yourself as well. Let's take a look at the video. On Friday's video, I'll go over a few of the comments that I saw on Friday's videos. And there's a lot of them, so forgive me if I can't go over all of them. And Savoy, just when I was starting to think that your bull and bear coin was loaded, no, it's not. It is for real. Look, and I got to tell you that sometimes when I start these shows, I say, it doesn't start sound good. So I have to re-roll the coin. And I tell you what, if the coin comes up bull, and I have to delete that video, and it comes up bull again, and I delete that video and it comes up bear in the next video, I tell you that it's a bear. I figured I'm not going to F with the coin. I'm going to just tell you what the coin really is, even if I have to delete the video and you don't see the one that I originally did, because these videos sometimes, man, it's hard to get them started, and sometimes I'll just start over a few minutes into it. But the coin is for real, Savoy. Silver Stalker, here's my coin. Listen, got it in my hand right now as we were talking, funny enough. Keep it right here on my desk. Let me go along here too. I'd like to thank everybody here for watching. Silver Stalker says 1 share of PSLV equals 0.361 ounces of physical. How did you figure that, by the way, Silver Stalker? And thanks for mentioning that. Or were you kind of joking there? I'm not quite sure. No. Sounds like you came up with that number somehow. I'd be curious how. And again, that's what we were talking about on Friday, ETFs. That I don't like ETFs, first off, because I don't understand them fully. Even the one that I thought I liked, PSLV, who I do like the company, I didn't understand it, and I lost quite a bit of money in it so far. And I don't like the other ones because of third-party risk. I don't like any of them because of third-party risk. The whole point of owning gold and silver and platinum is having it in your hands, in my opinion. Tiga Kun says, now 1830, am I wrong here? Yeah, we're up a little bit, man. 2 days ago. Paper, might as well go digital. Let me see if I can see anything that I can answer here. Again, I'd like to thank all you folks for commenting here. And no, really not too much. People kind of just talking about their local shops, saying hello. My local coin store is a better investment than getting a CD from my bank. I'm sure that's true to many degrees. But again, do your homework. And if you're a smarter buyer, it'll make your purchases much better as well. I'm not a big fan of having to rely on other people, so this is why I'm showing you all this stuff, to make you a smarter buyer. 700 Nitro Express said, haven't been to a coin shop in 20 years, but if they're having better pricing online, I should probably stop in and check. I'm all about paying less premium on bullion. Well, you know, I don't know if all the local coin shops, again, you know, here I advertise to beat APMEX, SD Bullion, and JM Bullion, the three big guys online. Because the reason I do that is, you know, when the market changed and people started buying online, I'd have younger guys come in and I'd quote them a price. And of course, I didn't know what other guys were selling for, so they'd say, well, JM, SD, or APMEX has it for this. And at first, I would go like, who the heck are they? And then I started looking. I said, well, you know, it's a whole new world, and I have to be competitive with the online guys. So I think if you're a local coin store out there and you're a local coin guy and you're listening to me, or in my opinion, local coin people, if you want to survive, you got to change with the times. So in order for me to survive as a bullion dealer, I had to be competitive with the online bullion guys. And really, for any local coin guy, you know, coin store guys listening out there, it's not too hard to do. You know, bullion business is not about getting rich. It's an aggregate of other things. You know, you can be highly competitive with bullion. You make a little bit of money, but you develop a lot of customers for other things. You know, all the bullion folks that come in that know me also know I do rare coins. They also know I own a business that does estate jewelry and antiques and things as well. So, and that stuff's more profitable for me as well. So, you know, for local coin stores not to be competitive with the online guys, it's just insane. You've already got the cost. You're already open. You might as well create more business and be. And if you're usually, if you're a local coin store and you're competitive with the online guys, usually means that you're more competitive. You're going to beat the local guys as well. So, local coin shops, if you're listening, and local coin guys, yeah, you want to be that guy. I think you're going to get more business from it. SLV is trading 100 contracts of paper and has one of physical. Yeah, I heard that almost 20 years ago, I want to say, maybe not quite 15 years ago or something, but I heard that in a video of somebody talking that it was 100 to 1 with SLV, and that's probably very much true. Again, you don't own silver, you own paper. Dumb things, you said that copper has been going way up. Yeah, that's part of the commodity boom. Thanks for watching. And that's really about it. There's not too much here. Oh, look, Fitri Ayush says you can win an iPhone Pro 12. So, I got to be a little more diligent and remove some of these things. Sorry about that, folks. And that's from Friday's videos. That's really about it. Hey, I always try to tell you on a daily basis what the best deals out there. I sound like a broken record for the last month or a month and a half now, but still, any recognizable products that you can buy out there, and I just kind of pulled the search engine up here to show you all different types of products. Any of these recognizable products here that you can buy. I'm going to talk about silver first. If you're not paying more than, I'm going to up my number a little bit because silver is getting harder to find. If you're not paying more than $6, and I was saying $5 an ounce at one time, if you're paying under $6 an ounce for silver premium. That's the best deal. If you're paying more than $6 an ounce premium, it's too much. And that includes silver bars, coins. More or less, you should be able to buy like these 100-ounce bars at spot plus 450, maybe a little cheaper, maybe a little bit more. You should be able to buy 1-ounce bars if they're available, and 10-ounce bars at under spot plus $5 per ounce. Again, if they're availability. Availability is a big thing right now. I mean, I can sell you guys probably all the silver you want at spot plus 450, but you may be waiting a month to get it. I know. As far as gold goes, any products that you buy out there that are less than $100 premium, I think that's the way to go right now. Gold bars are the best deal out there because it's looking like you can get them from anywhere from $70 to $90 over spot, depending on your dealer, availability, and the type of product. That's a far better deal than gold eagles at $180 to $200 over, and gold buffaloes at $200. That's crazy. So bars are the best deal out there. Next best deal after gold bars is going to be Krugerrands. I think you can get Krugerrands for spot plus 90 to 110 over at your local coin stores and online, right in that range off the top of my head. Those are the best deals. Anything over that is just too much money, folks. And again, that's just my opinion. Well, as I always say, buy local, spend it here, keep it here. This is for my local peeps in South Florida. I appreciate your business. And for you folks that are not living in my area, obviously I don't do online sales. I highly recommend you find a local coin or a precious metal dealer that has at least 10 years full-time experience doing this, and give them your business if they're willing to take it. I don't see why they wouldn't, based on the way I see it. You got to keep up with the times here. So if you don't have a local dealer in your city, try the county. If not in the county, take a drive somewhere in the state, even if it takes you an hour. Keep that money in your state. It's real important, especially in these times, to keep that money in our local communities, circulating in our local communities, and always think local. Hey, thanks for watching. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 for the best deal of the day or any questions that you may have. Happy to help you out. And as I said, hey, I really appreciate you watching. Have yourself a great day. We're in a great market, folks. Just relax, buy as much as you can, and sit back and watch the show. Talk to you soon. Bye.